All right, the numbers are pouring thick and fast. The first quarter earnings season. HSIL is in focus right now. Sandeep Sikka is joining us to talk more about that. Remember, Aishwarya Dadit just a while back was saying about home improvement as a big theme, which is picking up last couple of quarters, and HSIL too has benefited from it. The numbers look wonderful on the first quarter front. Mr. Sikka, thanks a lot for your time. The question is that the kind of performance you've captured in first quarter and the way we are seeing tailwind behind the home improvement sector because of people staying at home and general awareness improving, your home has gone up. Talk to us, how's the visibility looking from here on, say, for the full year basis? Does it appear that the momentum will continue?
Yes, we are internally very confident that the momentum will continue, because given the fact that last year COVID was much more severe for the businesses, given the fact that we had almost 45 to 60 days, which was a total shutdown. And now people have started living within this COVID parameters. We'll have, waves coming through. But we have adapted now, and we are seeing that the overall resurgence of demand in the market is also fast. Like, May we were hit. June, the demand came back very good. So our numbers for the month of June have been good. On the other packaging side also, which is one of our core business, like May, most of the restaurants were closed, also June, but now in the month of July, we are seeing restaurants are opening up. The demand for beer, liquor, which is one of the essential segment, for the industry as such, where we supply, our glass bottles. So there also we see the demand is coming back very fast.
Great. Let's talk about the raw material side of the story, because I understand that on the one side, companies are aiming at improving market share and gaining or making most of this improved demand. The cost side of the picture equation, how does it appear right now? And what's the outlook on margins? Do you think you would prefer compromising a bit on the margins and improve market share, etc., or do you think profitable, healthy margins is also possible going forward?
So one of the key ingredients for our manufacturing is the fuel and the oil prices. Over last 3-4 years in-house, we have built capabilities so that we can use various alternate fuels, like let it be furnace oil, LPG, or maybe the gas. So definitely our input prices have increased. Let it be the fuel, let it be some packing material, which is off late now started coming down. We have passed on a few of our costs to our customers, and we expect that in next 3 to 6 months, we'll pass on further these costs to the customers. And over a period of time, the margins which we had in quarter 3, quarter 4, we'll be able to expand those margins slightly. That is our internal expectation based on the current market conditions.
Right. At the same time, this higher costs of compliance, of fuel, and especially the unorganized side of the market is not being able to tackle the cost. And are you witnessing a lot of incremental business coming to major players such as yours at the cost of this unorganized side of the market, which are shutting down or probably will at best become contract manufacturers to companies such as yours?
So basically, if you see the core business today for our HSIL is the packaging product. So we also make building products, which is post demerger. We are doing an OEM business for third party. But when we talk about packaging, there is little bit of competition coming from the unorganized sector, which is based in North. But essentially, we are a South-based organization with our plants in Hyderabad. So there we don't feel this unorganized sector is hurting us right now. But we are seeing an overall demand for our products. Our customers are more happy to align with us because of our quality, our ability to service on time, and also the pricing and the other elements to it. Because internally we have built many competencies, in terms of operating efficiencies, which we tend to pass on to the customers over a period of time. So for this, most of our customers, they are today, fully aligned with us, and more customers want to align to us because of all these factors.
All right. All right, Mr. Sikka, we'll let you go on that one. Thanks so much for joining us on the show today. With that, we'll take a break here on the show. On the other side of the break, as promised, we'll get you that big news break we've been talking about, so don't go anywhere.